Welcome back to Everything Money, the show where Seth, your handsome host, brings your viewer questions, your normal person questions, to a couple rich fellas who handle a lot of money, have some properties, millions and billions of dollars going in and out, Paul.
Billions.
And today we're talking about Sleep Number. Now, Paul, this is not a sexy hype stock. This is a very boring company. They sell mattresses. Most of their sales go to Mo in his houses. And so Mo says, Mo, you say you will not sleep on another mattress.
No, I don't like going to hotels. I don't like going to Mexico for the sleeping reasons.
Oh, yeah.
But between my house, I have two, and between my entire family, we have 9 beds from Sleep Number.
Whoa, let me play a little violin for Mo. When he goes to his Mexican mansion.
The struggle is real.
I'm sorry. Yes, you can send condolences letters to Mo's Mexican mansion. Paul, your thoughts on Sleep Number, a boring stock. This video will not get the bangers if we were saying, this is not headed to the moon, Paul, but it is, in our opinion, probably in the wheelhouse of being a good investment. So in this video, we will look at the financials behind Sleep Number. We will look at their growth, their shares outstanding. We'll use our 8 pillars. This is a little book stock. This is a Joel Greenblatt stock. We'll get into that. We will also, if you want to trade Sleep Number, we will go to Mo on the trading aspect. You can join our Bidnast Nation, our community, and trade with Mo on a daily basis. But first, we will get Paul Gabriel's thoughts on this awesome company. I'm getting a Sleep Number bed very soon, Paul.
Are you?
And I own about $8,000 in shares of this company. So
because of the Little Book That Beats the Market.
Little Book That Beats the Market, yeah.
Guys, first off, follow us on Instagram. We appreciate that very much. Okay, so Sleep Number, I like boring companies that everybody's like, hey, why would I invest in? I like that. I have a hard time believing that mattresses are going away, right? So you think about, seriously, you think about things and our mattress is going to be around for a long time. Yeah, okay.
Gotcha.
Everybody knows Sleep Number. $2.5 billion market cap. Now, the 5-year PE is a little high. We want it to be less than 22.5 at 25.5. Last year's PE is 12, which is very low, right? But I think you'll look that it's probably the COVID-related, all of a sudden people went in flux and bought a ton of mattresses. Return on invested capital, 250%. I don't think that's very sustainable, but we'll see. No dividend. 5-year average free cash flow, 153, and last year's free cash flow was double. So that probably explains the big difference here. So far, 1 check and 1 X.
Pillar number 3, our pillar number 3 is revenue growth. Obviously, you want to see if they're making money before we buy this stock. Go ahead, Paul.
Well, we want to make sure they're increasing their revenue.
Sorry about that.
1.36 to 2.15. But keep in mind, guys, 1.36, 1.47, 1.6, 1.67. So just like a company that might be dropping because of COVID, because it had a bad year because of COVID, this one had a great year because of COVID. So you got to remember this when you're going through on this one. What I would look at is probably focus on the previous years. Look at these revenue growth numbers, Sethi.
Oh, wow, look at that.
Very consistent.
We like that.
Yeah, we do like that. So I like this very much so far.
Profit growth is pillar number 4, Paul.
60.7 to 201.
Oh, my.
Again, 201 is obscene. Look at the last previous years. Some ups and downs, but pretty consistently growing. Or the same, actually. Who knows?
Pillar number 5, Paul, is shares outstanding. We obviously want them to be buying back shares. What are they doing, baby?
My Lord, 41.7 down to 24 million shares. Seth, look at this. 10 years ago, they had 55 million shares. They're down to 24 now. What this means, guys.
We've seen that before.
I was just going to say, have we ever seen a buyback like this?
That's over 50% buyback of their shares. So guys, what this means is if 10 years ago, you owned 1% of the business, you never sold a single share, you never bought an extra share, you just kept the same number of shares. You now own over 2% of the business. They gave you more percentage of the company just by buying back their shares with you doing nothing. You now get over double the access over the last 10 years. That's incredible. I don't think we've ever seen that before. And this is what I always call the silent killer when companies issue more shares. They're killing you by diluting you as an investor. A lot of YouTubers out there say that issuing shares is a good thing. It helps the company's market cap. It does not. That is an absolute lie. That is like saying 2 + 2 = 7. It is absolutely false. Do not buy into that. Doesn't mean that issuing shares can be a bad thing is a bad thing all the time. It just means that you have to understand the situation and see with a company that might have a lot of cash or whatever they're trying to do, buying back shares and rewarding investors, it's pretty solid. Now, guys, this software we use was requested by all of our users. We created the software just for everybody here, and it's amazing. You get everything you saw there. You get the mobile app. You get 8 pillars, 30 years of financial data, stock analyzer tool, which you'll see shortly. We are making exclusive content only for our software users, access to all of us. Biggest thing here, Over 6,000 people have access to our Discord community. You can go in there and talk to like-minded investors. All of this for 87 cents a day. Less than a crappy cup of coffee. You get all of this. Our competitors are 200, 235. This is a no-brainer. This will pay for itself hundreds of times over. Go do it. Go to the link below, click the link below, sign up on everythingmoney.com or Patreon. Either one, you get the software.
Okay, Paul, so pillar number 6 is total liabilities divided by their 5-year average free cash flow. Can they pay off their current debts?
Yes, so the goal here is to take the average of the last 5 years of free cash flow, which you saw on the main page. We want to multiply by 5. We want the total liabilities less than this. Why? Think about it like yourself. If you and your neighbor make the exact same amount of money, live the exact same lifestyle, but you have $1 million in debt, they have 0. Or they have $1 million, who's more likely to go bankrupt? It's no different. So we just want to make sure that the company has, my goal is that if they do the next 5 years again, exactly the same, they can pay off all their long-term debts. So we want total long-term liabilities to be under $765 million.
Paul, I can assure you as a normal person, this was very eye-opening to me when we started doing our Carnival Cruise videos last fall, and you were just saying that this company has so much money in the bank they can survive a COVID.
Yep.
And so as a normal person, if you're just consistently looking at a ticker price, this was very eye-opening to me. What do they have in the bank and what can they withstand, especially with the correction possibly coming?
And just think about it like you're like you are a company, because companies are no different than you. You're no different than companies. You manage the cash flow the same way. So we wanted to have long-term liabilities less than $765 million. We have them at 412. So that's a definite check. They can pay off if they just have a little under 3 years of their free cash flow repeated, then they will be fine. They'll be able to pay off all their long-term debts.
Let's talk about that free cash flow. This is our pillar number 7, the grandpappy of them all, free cash flow growth.
132 million to 305 million. Now this is a fluke year.
I see.
So 153 times 20 is $3 billion. We just start at 20. We multiply the average of the 5 years free cash flow by 20 to get a valuation we start at. This is a check because the company is $2.5 billion. But I want to keep in mind, guys, last year was a big fluke year. 300 million. They didn't have any of those years previously. Mm-hmm. So I would actually take this average in your head to around 120, multiply by 20. It's still selling for 20 times free cash flow. Does that mean you go buy it? Not necessarily. You have to decide, is this a reasonable number for the company? That depends on growth factors, debt, etc. The 8 pillars are great for starting you on a screening process to say, hey, I already know I'm looking at this company further. I'm definitely going to look at this company further. Why? Because we have a guy here who owns 9 of their mattresses. We have another person here who's going to buy one. I'm very high maintenance about mattresses. I once bought a mattress. I hated it. After 2 weeks, I returned it. I remember them saying, it was like I bought it, but I didn't install it for like 2 or 3 months. Then I got it and I got it installed. I used it and they're like, we can't take it back. I'm like, fine, then just donate it. I'll buy different That's how important a mattress is to me.
If you're looking to trade Sleep Number, this is not a very exciting stock, Mo. I would imagine the volume is fairly low. But if you want to trade this in a more exciting venture as opposed to long-term buy and hold, you can join this handsome dreamboat to my right, Mo, and he guides you in the Bidnest Nation with day trading, momentum trading, long-term trades. Mo, tell us about, I can see, look at that red line, Mo.
Yeah. Now, the good thing about this being a low-volume stock is it's a low-volume stock, but it's not like a crazy hype stock. So yes. I'm not worried about the massive fluctuations on something like this, like maybe a Momo, maybe they have pretty low volume, I think. So with this one, you are trending down. I mean, this is for sure a dog stock, but you're starting to get, this is black. You're starting to get that little blip up right now. So that's good news. The bad news is, though, let's pull up the daily.
Don't tell me the bad news. Oh, look at under the averages.
It's you're sitting under the 100-day moving average and the 200-day moving average. So what's it going to take? It's going to take you to get some average volume, a better average volume, probably 500 to 600,000 shares traded per day. I think they're probably sitting around maybe 200, 325. So if they can just double their average volume, which I know they've done in the past, they can certainly get through those moving averages pretty easily.
Say you like this stock. It's falling under our 8 pillars. It's got 7 out of 8. How do we come up with a price? This was always very difficult for me, Paul. All the different stocks are just random numbers before I met you, like one is 1,000, one is $1, and I couldn't quite put the pieces together. But we made this stock analyzer tool. This is formerly Paul's Excel spreadsheet, which you viewers were requesting. And so we put it in the software, and you can put in assumptions, as Paul will do, and it'll get you a range of prices you should be paying for Sleep Number. Go ahead, Paul.
Now, remember, on the stock analyzer tool, there's a low, middle, and high assumptions you need to make. I want you to be conservative on the low, about where you think it's going to go on the mid, and if things go better than you think, on the high. But you still need to put these in to get a gauge of where the stock is. I'm not saying go pay exactly the price it gives you. On your first initial test, it's saying, are we in the ballpark? If we're in the ballpark, let's look further. So revenue growth. I went really conservative. Let's say their revenue growth falls to 5, midpoint is 7, high is 9. Now remember, they beat all those in the last 1, 5, and 10-year numbers. So I still think I'm being good here. Share change. Seth, look at this.
Oh,
we've never seen these share change numbers before in our lives. Mo, do you see this?
Is that double? Well, I can't read it.
Yeah, negative 12.9 last year, negative 14.5 a year for the last. This is insane.
That's crazy.
I went conservative and said, hey, let's say they try to pull it back a little bit, save some money. Negative 3, negative 5, negative 7. Profit margin, 4, basically between 4 and 5.5. Guys, this I'm going to take a screenshot. There's going to be a screenshot, pulling up your screen to see my assumptions here. I hit the analyze button. The stock is currently at $100 a share. Look at this.
Give it to me now.
We're actually pretty close. Yep. The exact middle, it's actually on the lower side of the middle range. So this tells me, like, I got to look at the stock more. I absolutely have to look at the stock more because, Mo, why are you smiling?
Because if they keep buying back shares, there's not going to be any shares left.
And you're going to own the entire, if you buy 100 shares today, you're going to own the entire company in about 5 years.
This is crazy.
Paul, my last question is that, Sleep Number is still very adamant about, Mo, having physical stores.
Yeah.
There's one on 18 right next. We drive past it all the time, and I think, boy, when is this thing going to close if the economy gets worse? But there are mattress companies that don't have the stores. I think this is Casper. This is
Casper,
Purple.
Helix, Purple. I mean,
Paul,
that's like a big thing now.
What's your thought process? I mean, you got to try this puppy out, right?
That's what I think. Like when I want to buy a mattress, I want to go lay on it. I want to feel it. I want to bring my girlfriend there and make sweet love to her in the store and make sure that it's
Sleep Number stores,
conducive.
they have curtains where you can actually go and do that.
private rooms. Yeah.
No, but seriously,
that's called the champagne room.
But then again, I never would have thought people would buy. But clothes are different than if you get a mattress sent to your house.
You're screwed.
And you're like, I don't like this thing anymore. I mean, how do you get that thing sent back?
What's actually really good about Sleep Number is they give you 100 days, and they actually will come and pick it up and pack it up and take it away from you.
Wow.
Their customer service is very good.
Pack it up, pack it in. All right, that is our take on Sleep Number. If this resonates with you, join our community at everythingmoney.com, and you can think like us and join over the 6,100 people who are thinking like us in this community. Paul, great job on that video, but you smoked that. And Mo, you too. Let's trade this puppy when it comes to this.
Yeah, let's do it. I mean, this is a good one.
Fondle thumbs up. See you next video.